What's up, guys? It's your boy Khaled, aka Bearish Bully. And no, this is not a video on nature or going out for long walks. I am going to be making a video on Lucid Motors as I promised, or CCIV. The reason why I'm actually just doing this outside is because I just felt like going out for a walk. The lighting still has to get fixed in the studio, so my makeshift studio. Let me just be clear about that. But once that's done, then I can go back and make my videos like I did before. However, in this video, we're going to be talking about, obviously, is Lucid Motors, why it tanked, what do I think about the company, why is it that I'm not investing, and will I invest in the future? So if you're new around here, please be sure to hit that subscribe button. It does help the channel. You can grow the family. If you like the content, please like the video. So this way I know if what I'm putting out there is good. And leave comments if you have any questions, or if you guys want me to post a video about something that might be interesting to you that I have not done yet. All right, so let's get into the video. So the camera's working, kinda. We'll just work with what we got. All right, now if you remember in my last video, this is what we were talking about. We were talking about PE ratios to see if the valuations made sense. Now, obviously for CCIV, they don't have any earnings yet, right? They have no profitability. These guys are still brand spanking new. All right, so we're still gonna have to wait to see how this thing plays out. But the whole purpose of a SPAC, it's a special purpose acquisition vehicle, right? So their purpose is to build funds. Like, these guys need money in order to actually do any kind of production. So looking at this, obviously no earnings, PE ratio can't really be put in here yet, but when you look at their chart, from the moment that it was announced for the SPAC deal, like something was going to happen, this thing started taking off, which is normal, especially in 2020, because a lot of new investors started coming out and everyone started flooding into SPACs, and more importantly, or more specifically, EV SPACs. All right, so this took off right away, became oversold. All right, and when anything shows an RSI of oversold, I generally stay away from it, only because it can come crashing down, and I'm not looking to get burned on something, especially when there's no product. So their valuation made no sense to me, especially if these guys are being valued at $15 billion, yet they managed to reach close to $90 billion. So from January 11th straight through until February 22nd, I took no part in this because it has to make sense for me to actually invest or even day trade it. It could be too risky, it could be dangerous, it could fall, and you can get burned if you're chasing something like this. Just like if something's coming down, you don't know where the bottom's going to be, so it's like you're trying to catch a falling knife. In here you can see I did have a level of support, or actually at first it was resistance set up at $35. Now there was a couple of previous levels, but I didn't really pay too much attention to them because I didn't really think about trading this at all. But either way, I mean, you can see back here at 27.12 there was another level of resistance, came back, broke through, and then it became a level of support. All right, bounced off here, and then again when it did come crashing back down, it bounced off of it again. Now once it finally broke through this $35 level, it did come back, almost retested it, and then it just shot up. I mean, this thing went parabolic. But when something like this happens, it's usually just best to take profits once you get into this level. I mean, once it came up here, it had a valuation of $90 billion. All right, this thing was supposed to be valued at 15 to max $20 billion, right? And this is pre-production. This is pre-revenue, all right? But now it's already at 90 billion. So once the news finally came out about the merger, it tanked. It did come back to the level of support and it broke through, but it did come back to kind of settle. The next day it fell through. So let's look at why it tanked, right? There's an interview that actually came up with Rawlings, who is the CEO of Lucid Motors, So let's just take a listen to his interview.
Until the second half of 2021, you said it would deliveries of Lucid Air would start in the spring. What's behind that delay?
Well, I mean, I was pushing like crazy for spring, and when we met with the Churchill Capital team, and I took Alan Mully out in the car, and Alan drove the car, loved it, the very first car off the production line. We had a meeting of minds with Alan and all his experiences from Boeing, with Michael Klein and myself. We all got on like a house on fire, and we recognized that, well, Peter, why are you pushing like crazy for this sort of almost artificial constant state in spring? What's really important here is to get the quality right. You will know when that is perfect, when it will truly delight a customer. And so they freed me. They said, look, get the product right. Don't work to the artificial construct of a specific date. Well, if it rolls on into the second half of the year, we're okay with that.
As you can see, the delay is not a good way to start. That's going to spook any kind of investor, right? Because they're expecting product, they're expecting something to come out soon, but now they have nothing to look forward to, or at least not for the immediate future. All right, so let's take a look at something else here. Now I'm going to go into the news article. This is from Thinkorswim. SPAC deal values Lucid Motors at $11.75 billion. An oversubscribed PIPE deal that saw shares priced at $15 valued the company at $24 billion. Rawlinson says valuation is a reflection of our technology. Naturally, he's going to say something like that. Nobody's going to go out there and say something less about their own company. All right, so let's move on from that. Now, the second thing is Rawlinson highlighted the company building its Arizona factory in record time. The factory was the first purpose-built electric vehicle facility in North America. The factory can produce 34,000 units annually. Planned expansion will take this factory to production capabilities of 365,000 units annually. Okay, so Lucid Motors is on track to begin delivering the Lucid Air in the second half of 2021. Now remember, they initially said it was going to happen in the first half, right? Around springtime, it's going to be starting up. But now it got pushed back. So that's what spooked a lot of people. Lucid Motors reports it had over 7,500 reservations as of February, representing 650 million in shares, in sales. So with that puts it at an average of about $86,000, just a little over $86,000 per vehicle. So it's not exactly a cheap vehicle. And like they said in the interview, they're specifically targeting the luxury brand, right? They don't want to go after Tesla. They know obviously they're going to be put against Tesla because it's EV, but they're specifically trying to go after Mercedes-Benz. So it is going to put them in a higher class, higher cost. So it's going to also keep them in a very niche market, right? But let's move on. So Rollins goes on to say that Lucid Motors will follow a direct sales model with online sales and retail locations. The company has 6 retail locations open now in California and Florida. There are 9 more stores in development, targeting the state of New York, Illinois, Virginia, Arizona, and Massachusetts. The company is planning on building out its retail store network in Europe and the Middle East in the first half of 2022. So that's a pretty good thing to look at, the fact that they already have storefronts. So they are pushing their product, even though it's on a much smaller scale, but it is a good sign that they do have something to work with. Now, Jim Cramer spoke with Rollins on CNBC, highlighting the charging speeds from Lucid Motors. And what he said was this is a next generation technology. He said that the charging technology is a huge differentiator. Lucid Motors has partnership with Electrify America, owned by Volkswagen. So keep in mind that Rawlinson is a former Tesla chief engineer and worked on the Tesla Model S. So he does have a pretty good amount of experience when it comes to EV. So I wouldn't be surprised if this does actually come into fruition. But the only thing that you really have to keep in the back of your mind is, when is it going to happen? Right? Everybody's going to come out there and say, hey, you know what, tomorrow we're going to do this. But when tomorrow comes around, what's going on? So let's look at something else here. So you can see in another interview over here that Rawlinson says, we're going after S-Class Mercedes, but it's a natural comparison, and I accept that comparison with Tesla. Would say our main competitor is a car company. I highlight Mercedes-Benz in terms of the attributes of Lucid Air. So we're going after the S-Class Mercedes, but it's a natural comparison, and I accept that comparison with Tesla. So these guys are going after a very niche market. Now, with something like Tesla, yeah, I understand it's not exactly the most luxurious electric car out there, but it's also the type of market that they're focusing on. How many sales are they actually going to get? Like, there's not a lot of people that are going to be able to afford a car that's around $90,000 starting. So their sales may not be as big as they're projecting. Like, these guys have an outlook of forward-looking 300 million cars being sold in 2025. So my thoughts on this company have changed slightly. Now, at first I was just like, okay, you know what? No, this is another Tesla. They come out, they claim to be all big and bad, but there really isn't many products. Their production facility hasn't even popped up yet they're making all these big claims. So then, after doing a little bit more research into the company and Churchill Capital and BlackRock, like, there's a lot of people that are backing them up, and they're not small institutions. Like, BlackRock is huge. Churchill is actually huge as well. But I think that even if you go onto their website, you check out their product that they are planning on putting out, and it seems legit. There's a lot of cool things, cool features about their cars. It is extremely luxurious looking. So for me, it kind of looks more like a chauffeur car. If you're sitting in the back, you're gonna look like you're pimping. If you're sitting in the front, you're gonna look like you're driving somebody else that's supposed to be in the back that's pimping. All right, so I already mentioned why it is that I didn't buy Lucid, what I think about the company, what it is that made the stock fall. So now I'm pretty sure, like, everybody's been asking me is if I'm buying or if I'm going to buy. I may buy later on down the road once I see that their production facility has come into play. They are going to start pumping out products, and I'll wait for people to give their reactions to their products. There's no point in me buying into a company and then 2 months later, 3 months later, you start hearing, oh, defect, oh, this happened. I mean, naturally that is going to happen, but I like to wait until all the kinks are done. So I'd still give it a quarter of sales before I finally say, hey, you know what, I'll buy in. And also, if you're looking for just a quick entry point, like in the near term, then what you can do is, if you're looking at the daily chart here, you see they are back down below this level of resistance now. Once they've finally broken above the level of resistance, come back to back test it. So if it runs up past 35, maybe it'll go up to 40, and then it comes back to 35 and regains a level of support there. Then you can start looking for entry points, and then maybe it'll start making a climb. And of course, by that point, it's also going to be above the 20-day EMA, which is usually a good sign of strength. Now, a lot of times when something dips, you want it to actually retrace to the 50-day EMA and see how it reacts to it. And if it reacts to it by just bouncing off and shooting back up, then it's very strong. The bulls are still in favor. But if it's not going to break above this $35 level, then you can see it coming back to the 50. See what happens at the 50 day. If it holds, you might be good for something a little bit more like consolidation, and it could run up. If not, then I would take my profits if you have any, or cut your losses before it goes down even further. And if you all remember what happened with Nikola, I mean, this was a long time back, but let me pull it up here. There was a lot of excitement. It had a massive run up, and of course a huge tank. Now, granted, with Nikola, they had a bunch of red flags, right? They had production issues, and then of course it was leaked that the truck was never driving in their commercial or their little shoot. It was just rolling down a hill. So that's what also made it drop significantly. But however, it's the same thing. Runs up, parabolic, comes back, consolidates. People realize that, you know what, it's still very early stage, and then everybody wants to take their profits before it turns into losses. All right, so just make sure that you guys set up levels of support and resistance. Like I said, 35 is a very, very big number. So just keep that in mind. If you're trading above that right now, then either you want to bring your cost per share down, you know, buy in a little cheaper and then just wait it out, or take the L. It's better than having a big L. All right, so let me know what you guys think. Are you guys holding? If you guys have any other questions, maybe a different company, let me know, and then I can make a video on that. Hope you guys stay green, and I'll see you in the next one.